CM Life Sciences 3 merging with EQRX. That is a company focusing on reducing drug prices. Keith is still with us, as we said, along with Eli. Eli, welcome back. It's nice to see you again.
Thanks, Scott. Nice to be here.
I'll lob you the first question on this, because this is somewhat home cooking for you. You were an early investor in EQ. Why this deal? Why now?
Listen, I think that the power of a SPAC platform is that you can bring enormous amount of capital to a true growth company. And you know if it's a growth company if you give it more money and it goes faster. And EQRX is one such business. This deal will bring about $1.5 billion to the balance sheet of the company and allow it to accelerate its business model of disrupting the distribution model for drug development, bringing in innovative drugs, partnering with payers, and selling it to the patient at a discount. This is the exact kind of thing that we set out to do.
Keith, is it harder to impress the market these days with deals like this? I'm just noticing it's a touch below $10, which is, the demarcation line, if you will, in SPAC land.
Well, the answer to that question is yes. There's clearly been a lot of pain in the SPAC ecosystem. There was too many SPACs and too many deals. That's okay. So now as you work through that pain, the fact that we can raise $1.2 billion for our pipe from some of the leading investors in the world, whether they be growth investors like SoftBank, whether they be long-only investors like Fidelity, or whether they be some of the early venture capital investors in the company like Andreessen Horowitz. So from some of the best investors in the world, as well as from strategic partners who are ultimately going to put their money where their mouth is and be partners with EQRX is a great thing. We negotiated, it's actually way healthier, right? We negotiated a deal with the EQRX management team to put money in at a fair value, right? It's a euphoric market where that re-rates the next day up 80% like it did on our first deal. Now, where ultimately we should be judged is where does this company trade 1, 3, 5 years from now? And by putting, as Eli said earlier, I think the company will have close to $2 billion with the $1.8 billion we're putting in plus the $300 million on their balance sheet. By putting $2 billion on this company's balance sheet, they can actually, innovate and have enough money to go bigger and faster. And, what EQRX is set up to do is something we're going to look back on and say, this is inevitable. Why did it take so long? And what that is to take all the innovation that's occurring in drug development and let it flow through to the patient by lowering drug prices. So simply put, what EQRX does is they develop the same drugs that are developed by the largest pharma companies today, that the largest pharma companies sell for $200,000-$300,000. EQRX develops them. They're patently different, substantially the same, or better. They develop those drugs, and by partnering with what they call a global buyers club, the payers, they say, we'll sell you that drug for 35% of the price. So instead of $200,000, it's $50,000. And what they ask for in return from the payer is, we need you to pull this product to your members. So instead of pharma companies spending lots of money on shiny Super Bowl commercials and having to use that to offset the price of the $200,000 drug, EQRX, by having scale, relationships with this global buyers club, can sell the drug for a much lower price without having to have a sales force, without having to have a huge marketing expenditure, save the consumer lots of money, and also make margins that are consistent with where big pharma is today.